In anticipation of the Bitcoin halving 2024, many are wondering what will happen to the price of Bitcoin. This captivating event is a topic of interest for anyone invested in cryptocurrency. A Bitcoin halving event is a significant milestone filled with curiosity, speculation, and a flurry of activities within the thriving crypto world. Essentially, a Bitcoin halving refers to the reduction or halving of the reward that miners receive for verifying transactions on the network. This event occurs approximately every 4 years. The implications of such an event are far-reaching, potentially influencing the value of Bitcoin and the overall dynamics of the market. This occurrence is a complex and intricate part of the global financial technology landscape. But what exactly is a Bitcoin halving, and what does it mean for the future price of this digital currency? In the most basic understanding, a Bitcoin halving is an event that diminishes the reward for mining new blocks on the Bitcoin network by a staggering 50%. This might seem a bit confusing at first, but think of it as a scheduled event that takes place on this revolutionary digital platform. Venturing into the world of blockchain technology, this halving event is an integral part of the Bitcoin network's operations. It is a process that happens approximately every 4 years, or after every 210,000 new blocks have entered the Bitcoin blockchain. This is not an arbitrary event, but a planned and predictable incident that is built into the very design of the Bitcoin network. Picture this as a digital gold rush, a metaphorical representation of the miners striving to unearth more of this digital currency. During a halving, the amount of gold, or in this case Bitcoin, available to these miners suddenly decreases. It's an event that significantly alters the landscape of the Bitcoin mining scene. Now, the rationale behind this halving is deeply ingrained in Bitcoin's design architecture. Bitcoin, unlike traditional currencies, has its upper limit fixed. The total number of Bitcoins that will ever exist is capped at a seemingly random yet strategically chosen number, 21 million. This definitive upper limit creates a sense of scarcity, an attribute that is uncommon in the world of traditional fiat currencies. This scarcity mimics the finite quantity of gold on Earth, making each coin potentially more valuable as the supply decreases and demand increases. This design strategy is indeed a fascinating one, tying the value of Bitcoin to the fundamentals of supply and demand. By halving the reward for mining, the rate at which new Bitcoins enter circulation is deliberately decelerated. This deliberate deceleration is a protective measure designed to preserve the longevity of the Bitcoin supply. And hence, the Bitcoin halving process, while disruptive in the short term, is a key component in preserving the long-term sustainability and value of Bitcoin. It provides a way to slow the rate of Bitcoin production, ensuring that the entire supply isn't exhausted prematurely. So what can we expect to happen to the price of Bitcoin after the 2024 halving? The answer, as with many things in the world of cryptocurrency, is not as straightforward as one might hope. Bitcoin halving is a process that cuts in half the number of new Bitcoins being created and earned by miners, which impacts the digital economy in a variety of ways. On one hand, a decrease in the reward for mining could disincentivize miners. This is because the rewards they receive for their efforts are reduced, which makes the process less profitable for them. This lack of incentive could potentially lead to a decrease in the network's security. Fewer miners might mean fewer checks and balances in the system, which could, in turn, make the network more susceptible to attacks or fraud. On the other hand, the decreased supply of new Bitcoins entering the market could drive up the price. This is based on the basic economic principle of supply and demand. When the supply of something is reduced, but the demand for it remains strong, the price typically goes up. In the case of Bitcoin, this could mean significant price increases, particularly if demand remains strong or even increases. It's important to note that historically, Bitcoin halvings have led to periods of significant price increases. This is a pattern that has been observed in the past, and it's something that many investors and traders keep an eye on. But remember, past performance is not an indicator of future results. While it's tempting to rely on historical trends, the crypto market is influenced by a myriad of factors. From global economic conditions to regulatory changes, these forces could dramatically alter the trajectory of Bitcoin's price. And above all, it's impossible to predict with certainty what will happen. Let's take a step back and examine the historical data from previous Bitcoin halvings. This examination will help us to recognize the repetitive patterns that have manifested from past Bitcoin halvings. The inaugural Bitcoin halving event transpired in November 2012. During this period, the valuation of a single Bitcoin was approximately $11. Surprisingly, a year post this halving, the value of Bitcoin escalated drastically, achieving a value of more than $1,000 by November 2013. This substantial increase in value is nearly 100 times the original price. The Bitcoin ecosystem witnessed its second halving event in July 2016. At the brink of this halving, the Bitcoin value was nearly $650. As we move forward 18 months from this point, the scenario changed, and by December 2017, Bitcoin had achieved a new high, reaching a value of nearly $20,000. This incredible increase is almost 30 times the price before the halving. The most recent, the third Bitcoin halving, took place in May 2020. Just before this event, the price of a single Bitcoin was nearing $8,500. However, within just a year of this event, Bitcoin achieved a new record high, with a value of over $60,000 by April 2021. This substantial increase, almost 7 times the original price, was achieved in less than a year. While we always bear in mind that the past performance of Bitcoin is not an exact indicator of its future results, these historical trends do indeed provide us with valuable insights concerning the potential effects of Bitcoin halvings. In the grand scheme of things, it's crucial to recognize that a multitude of varying factors influence the price of Bitcoin, and the effects of halving are merely one component of a more extensive, intricate puzzle. In conclusion, a Bitcoin halving is an event that reduces the reward for mining new blocks by 50%, occurring roughly every 4 years. It is a mechanism designed to preserve the scarcity and value of Bitcoin. The impact of a halving can vary, potentially leading to a decrease in network security, but also potentially driving up the price of Bitcoin. The only certainty is that halvings add a layer of complexity and intrigue to the world of Bitcoin. So, whether you're a miner, investor, or just a curious observer, the world of Bitcoin never fails to fascinate. It's a world where the rules are written in code and the future is always up for grabs. Remember, in the world of Bitcoin, knowledge is power. So stay informed, stay curious, and keep exploring the fascinating intricacies of this digital currency, especially as we approach the Bitcoin halving 2024.